Do you know that the US dollar is no longer the most dominant currency in world trade? It's true. According to a recent study by the Bank of International Settlements, the US dollar has been overtaken by the euro and the Chinese yuan, which have gained more popularity among traders and investors. In this video, I will explain why the US dollar has lost its trade dominance, what are the implications for the global economy, and what are the chances of a comeback. Watch this video until the end and you will discover the secrets behind the changing role of currencies in international finance. The US dollar has been the reserve currency of the world since 1945 when it replaced the British pound after World War II. The US dollar was widely used as a medium of exchange, a unit of account, and a store of value in international trade and finance. The US dollar benefited from the economic and political power of the United States, as well as from its deep and liquid financial markets. The US dollar also enjoyed a privileged status as the main currency used by central banks to hold their foreign exchange reserves. However, things have changed in recent years. The US dollar has faced increasing competition from other currencies, especially from the euro and the Chinese yuan. The euro was launched in 1999 as a common currency for 19 European countries, creating a large and integrated economic area. The euro has become more attractive for trade and investment within Europe as well as with other regions such as Africa and the Middle East. The Chinese yuan has also emerged as a rising star in international finance, thanks to the rapid growth and opening up of China's economy. The Chinese yuan has become more widely used for trade and investment with China, as well as with other Asian countries. According to a recent study by the Bank for International Settlements, the US dollar's share of global trade invoicing has declined from 56% in 2013 to 51% in 2019. While the euro's share has increased from 32% to 35%, and the Chinese yuan's share has increased from 2% to 4%. The study also shows that the US dollar's share of global foreign exchange reserves has declined from 66% in 2015 to 59% in 2020, while the euro's share has increased from 20% to 21%, and the Chinese yuan's share has increased from 1% to 2%. Why has the US dollar lost its trade dominance? There are several factors that have contributed to this trend. One factor is the relative decline of the US economy compared to other regions, especially China and Europe. The US economy has grown slower than China's economy since 2000. And its share of global GDP has fallen from 31% to 24%. The US economy has also suffered several shocks, such as the global financial crisis of 2008 to 2009, the COVID-19 pandemic of 2020 to 2021, and the political instability of recent years. These shocks have eroded confidence in the US dollar and its role as a safe haven in times of crisis. Another factor is the diversification of trade and investment flows among different regions and countries. As the world economy has become more interconnected and multipolar, traders and investors have sought to use currencies that better reflect their economic ties and preferences. For example, European exporters and importers have increased their use of the euro for trade within the EU and with other countries that have close economic and political relations with Europe. Similarly, Chinese exporters and importers have increased their use of the yen for trade with China and with other countries that are part of China's Belt and Road Initiative. A third factor is the development and innovation of financial markets and technologies in other countries. The euro and the yen have benefited from the creation and expansion of financial instruments and platforms that facilitate their use and circulation in international markets. For example, the euro has been supported by the launch of Eurobond market, the Euro interbank market, and the Target 2 payment system. The yen has been supported by the launch of offshore yen market, the cross-border yen payment system, and the digital yen project. What are the implications of the US dollar's loss of trade dominance for the global economy? There are several implications that could be positive or negative depending on the perspective. One implication is the reduction of the US dollar's influence on global monetary policy and exchange rates. The US dollar's dominance has given the US Federal Reserve a significant power to affect global liquidity and exchange rates through its monetary policy decisions. The US dollar's dominance has also made other countries vulnerable to exchange rate fluctuations and currency crises caused by external shocks or speculative attacks. The decline of the US dollar's dominance could reduce these effects and allow other countries to have more autonomy and stability in their monetary policy and exchange rate regimes. Another implication is the increase of competition and cooperation among different currency areas. The decline of the US dollar's dominance could create more opportunities for other currencies to play a bigger role in international trade and finance, as well as to challenge or complement the US dollar's functions. This could lead to more competition among different currency areas for market share and influence, as well as more cooperation among them for coordination and regulation. A third implication is the change of costs and benefits for different actors in the global economy. The decline of the US dollar's dominance could affect the costs and benefits of using different currencies for different actors, such as governments, central banks, firms, and consumers. For example, governments and central banks could face lower costs of borrowing or holding foreign exchange reserves in other currencies than the US dollar, but also lower benefits of seigniorage or geopolitical leverage from issuing or holding a dominant currency. Firms and consumers could face lower costs of transaction or conversion in other currencies than the US dollar, but also lower benefits of price stability or network effects from using a dominant currency. What are the chances of a comeback for the US dollar? There are several factors that could support or hinder the US dollar's recovery of its trade dominance. One factor is the relative performance and resilience of the U.S. economy compared to other regions and countries. The U.S. economy has shown a strong recovery from the COVID-19 pandemic, thanks to its fiscal and monetary stimulus and its vaccination campaign. The U.S. economy could also benefit from its innovation and competitiveness in sectors such as technology, energy, and biotechnology. However, the U.S. economy also faces several challenges such as its high public debt, its political polarization, and its trade disputes with other countries. Another factor is the development and regulation of digital currencies and payment systems. The US dollar could benefit from the adoption and innovation of digital technologies that facilitate its use and circulation in international markets. For example, the US dollar could be supported by the launch of a digital dollar project by the US Federal Reserve or by private initiatives such as stablecoins or cryptocurrencies. However, the US dollar could also face competition and regulation from other digital currencies and payment systems. For example, the US dollar could be challenged by the launch of a digital yuan project by the People's Bank of China or by regional initiatives such as the digital euro project by the European Central Bank. These are some of the factors that could affect the future role of the US dollar in world trade. I hope this video was useful and made you understand better why the US dollar has lost its trade dominance and what are the implications for the global economy. If you liked the video, leave a like, subscribe to the channel, and activate the bell to not miss the next videos. If you have any comments or questions, write them below and I will try to answer you as soon as possible. Thank you for following me and see you next time.